Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 27th, 2025, and we're diving into the latest earnings report from the Bank of Montreal for the quarter ended July 31st, 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. The Bank of Montreal has released its Q3 2025 earnings, and there's a lot to unpack, from earnings coverage ratios to interest and dividend coverage. Let's get started.
Earnings coverage ratios. Let's start with the earnings coverage ratios. The Bank of Montreal reported an interest coverage ratio of 25.91 times for the 12 months ended July 31st, 2025. John, what does this indicate about the bank's financial health?
This is a strong indicator of the bank's ability to meet its interest obligations. An interest coverage ratio of 25.91 times means that the bank's earnings before interest and taxes are more than sufficient to cover its interest expenses. This is a positive sign of financial stability.
And what about the dividend coverage ratio, which stands at 24.17 times?
The dividend coverage ratio of 24.17 times suggests that the bank is well positioned to meet its dividend obligations. This is calculated by adjusting the dividend requirements to a before-tax equivalent using an effective tax rate of 24.23%. It shows that the bank has a robust earnings base to support its dividend payouts.
Operational efficiencies and future outlook. Moving on to operational efficiencies, the bank's earnings before interest on subordinated indebtedness and income tax were $11,977.35 million. How does this compare to their interest requirements?
The bank's interest requirements for its subordinated indebtedness were $938.80 million. With earnings before interest at $11,977.35 million, the bank is in a strong position to cover these costs. This reflects effective management and operational efficiencies.
What can we expect from the Bank of Montreal moving forward?
Given the strong earnings coverage ratios and operational efficiencies, the outlook for the Bank of Montreal appears positive. The bank's ability to manage its costs and maintain a healthy earnings base bodes well for future performance.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.12 based on a survey of 4 analysts. How does this align with the bank's actual performance?
While the actual adjusted EPS hasn't been explicitly mentioned in the report, the strong earnings coverage and operational efficiencies suggest that the bank is likely to meet or exceed these expectations. The market reaction will be closely watched as more details emerge.
What should investors keep an eye on?
Investors should monitor any updates on the actual EPS figures and any guidance provided by the bank. The alignment of actual performance with analyst expectations will be crucial in determining market sentiment.
Key takeaways. In summary, the Bank of Montreal has demonstrated strong financial health with impressive earnings and dividend coverage ratios. John, any final thoughts on the bank's investment prospects?
The bank's robust financial metrics and operational efficiencies make it an attractive investment option. The positive outlook and ability to meet financial obligations suggest continued stability and growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on the Bank of Montreal's performance in the comments below.